Is SpaceX about to become the most valuable company to ever go public? Whispers of a 2026 IPO are growing louder, with valuations ranging from $800 billion to a staggering $1.5 trillion. To see if these numbers are justified, we'll analyze its revenue streams, apply standard valuation tools, and compare it to industry titans. The primary driver behind SpaceX's colossal valuation is Starlink, its satellite internet service. Starlink aims to provide high-speed internet globally, especially in rural and underserved areas where traditional broadband cannot reach. The model is straightforward: pay for hardware and a monthly subscription fee. With around 4 million subscribers by late 2025, we can estimate current revenue. Assuming an average monthly fee near $100, monthly revenue is about $400 million. Over a year, that translates into a substantial stream. 4 million times 100 times 12 equals about $4.8 billion per year. Projections suggest Starlink could reach 10 million subscribers by a 2026 IPO. That pushes annual revenue toward roughly $12 billion before enterprise upsells. Beyond homes, Starlink is expanding into enterprise, airlines, cruise ships, and large corporations with remote operations. Higher fees here can add billions to the top line. If 5,000 vehicles each pay $100,000 per year, that's another $500 million, high margin. Scale to 50 million subscribers at $100 a month, and you're near $60 billion per year. The core rationale behind lofty valuations. While Starlink is the growth engine, SpaceX's launch services are the profitable foundation. SpaceX has dominated both commercial and government launch markets, with reusable Falcon 9 and Falcon Heavy. Over 90 launches in 2023 and pacing for 140 plus in 2025. Unmatched cadence. Each launch generates significant revenue, funding ambitious projects like Starship and expanding Starlink. Estimate revenue via launches x average price. Dedicated Falcon 9 commercial missions often cost around $67 million. Government launches can exceed $100 million. Assume 140 launches at a $70 million blended average, about $9.8 billion. Multi-year NASA and national security contracts add stability. Reusability dramatically lowers cost per launch versus expendables. SpaceX can undercut on price and still defend margins, creating a formidable moat and financing R&D. The launch business is both a revenue source and a strategic fortress for the whole company. Starship is SpaceX's biggest, boldest bet. A fully reusable, super heavy lift vehicle, 100 plus tons to orbit, up to 100 people, to Earth orbit, the Moon, Mars, and beyond. Its capability aims to make current launchers obsolete, including Falcon 9. If successful, Starship changes the economics of space access. Near term, deploy next-gen Starlink in larger, more efficient batches. NASA has awarded a multi-billion contract for a lunar lander version, nearly $3 billion, with more possible upon successful missions. A successful landing could unlock further contracts and cement deep space leadership. Longer term, rapid point-to-point transport, huge potential, heavy regulatory friction. Space tourism, private stations, orbital construction, multiple new markets. Most ambitiously, a path toward a self-sustaining city on Mars, hard to quantify, central to the narrative. The $1.5 trillion target leans on Starship delivering even a fraction of this revolutionary promise. It's an almost unlimited growth ceiling, a story investors buy into when they price SpaceX like a world-creating platform. A common way to value high-growth companies is the revenue multiple method. Take annual revenue, multiply by a market-based multiple. Multiple depends on growth, profitability, leadership, and comparables. Assume Starlink at $12 billion in 2026. Launch services around $10 billion. Total revenue $22 billion. Mature industrials trade 2-4x. SaaS with strong recurring can be 10 to 15x. To hit $800 billion on $22 billion revenue requires 36x, very high, but not impossible given dominance, recurring Starlink, and Starship optionality. $1.5 trillion on $22 billion implies Wander 68 pricing in unproven Starship markets like point-to-point travel and Mars. The leap from proven business to visionary future is the multiple expansion. Investors paying those multiples are betting on extraordinary sustained growth. Another approach is discounted cash flow. Value today equals the present value of future free cash flows. Because of risk and inflation, we discount future cash to today. For SpaceX early years, heavy investments in Starlink and Starship depress cash flow. Later years, explosive growth as subscribers scale and Starship opens new lines. Final value is highly sensitive to long-term assumptions. A conservative DCF. Starlink plateaus near 20 million. Starship limited to Sats and Lunar. You land nearer $800 billion. An optimistic DCF. 50 million plus subs and Starship unlocks multi-billion new markets. You justify $1.5 trillion. DCF here is less about today than a calculated bet on tomorrow. Small changes in long-term inputs drive massive swings in present value. To contextualize SpaceX's valuation, NVIDIA sits near $2.8 trillion, Boeing near $200 billion. $800 billion makes SpaceX about 4x Boeing. $1.5 trillion places it beside the very largest. In the realm of Microsoft and Apple, Crunchbase News notes prior giants, Alibaba, $168 billion at IPO. Meta, $104 billion. An $800 billion, $1.5 trillion SpaceX debut would shatter records. Unlike software e-commerce IPOs, SpaceX is capital-intensive hardware. Investors must believe in its moat and execution. Bulls argue the TAM across telecom, logistics, and exploration can support mega-cap status over time. It's a bet that the right hardware can create software-scale value, or more. The optimism comes with weighty risks. Regulatory risk. Starlink needs landing rights worldwide. Geopolitics can block key markets. Point-to-point Earth travel demands regulatory overhauls that could take decades, or never arrive. Immense capital is required to develop, build, and launch thousands of satellites and dozens of Starships. Setbacks could force more fundraising and dilute holders. A Starship stall or catastrophic failure would evaporate modeled cash flows. Valuations can plunge. Competition remains a long-term threat, Blue Origin and others closing in. In satellite internet, Amazon's Project Kuiper could force price wars, compressing margins. Execution risk is tied to Musk, vision, drive, engineering, but attention split is real. Leadership shocks would hit valuation. Ambitions are immense. Delays or misses could erode investor confidence. SpaceX bets big. When big bets fail, consequences scale. The gap between $800 billion and $1.5 trillion comes down to one question. What are you buying? The dominant high-growth company that exists today, or the world-changing interplanetary civilization promised for tomorrow? Both valuations can be justified. It depends on your assumptions. Numbers reflect the story we tell about the future. $800 billion is aggressive but plausible for today's SpaceX. A premium 135x on $20 billion 2026 revenue lands in that zone. It prices SpaceX as a top-tier tech platform with a durable moat. $1.5 trillion is different. It can't be reached by Starlink and Falcon 9 alone. It requires belief in Starship's timely success and new revenue streams like point-to-point and cislunar logistics. Think Watming 70x revenue or a DCF with heroic long-term assumptions. That number prices the dream. A plausible range sits between these poles. The IPO will balance today's reality with tomorrow's promise.